if you're a person who's trying to start a side hustle, the tax code is really there for you. Like there is no better place to get like easy access to the benefits of being a business than the US tax code. So even when you start something teeny tiny nights and weekends in your garage, you still count to get all the benefits of being a US business, which is pretty awesome.
So Stackers, even if you're not thinking about starting a business today, right now, you're going to want to listen to this. You're going to want to mark this episode. You're going to want to come back to it because we're going to dive in to that. And if you're not starting a business, we're just going to talk a little taxes 101. Let's talk about taxes for actual humans, and the perfect woman to do that. Hannah Cole's here. How are you?
I'm so good, Joe. Thanks for having me.
You know, the reason I like talking to you about this stuff, Hannah, is that you and I have this shared background. Like I was somebody who was an English major who I don't think anybody would have thought that I'd end up being a finance guy like you, of all people. You were the same. I mean, you were somebody who, what'd your parents say to you?
My parents were very encouraging, so I want to give credit to them. But my dad's accountant, so if those of you who are listening and you're like, wait, who is this lady? What does she do? So I've been a professional artist, a visual artist for 20 years. And I know that is completely bizarre that I wrote a tax book and I started a tax education company. But it's really because I'm kind of a creative weirdo, and I feel like creative weirdos, humanities majors, people outside those like well-resourced STEM fields, like we don't get this information. There's a big hole. And I just wanted to be able to kind of deliver that in the way that, you know, an English major would appreciate and feel valued and seen. So yeah, my dad's accountant said to me when I sat down across from him for the first time to do my taxes as a professional artist, when are you going to get a real job?
Oh my God. Boy, that's encouraging.
Oh my gosh. I was like, you're looking at it.
And I started out writing financial stuff for people. One of the first people I wrote for was this wonderful woman, Miata Adoga. And her mission is to empower artists. She's in Los Angeles, and she has found that lots of artistic people think, well, I'm supposed to be bad with money. Money's the devil. I'm not good with money. Like there is this stereotype among artists that you even talk about in your book that's not true at all.
Yeah, it's not true at all. I mean, the fact is that artists, frankly, because they have to be, they are so resourceful, and they will just go get whatever resources they need, fill whatever holes, get whatever education in order to make some magical project happen. So I think artists, and I say this because I am one and because my community are creative people, we're incredible. We're real like doers, and we make things that are invisible to people suddenly become real. So I think it's kind of magical. I think it's amazing. And yeah, we get kind of fed this line that we're bad at money. And, as soon as you start to believe that yourself, you can make it come true. So it's really important, I think, that we realize like, oh, this is just another skill. And I'm good at getting new skills.
And you say like any other skill when we start out, I mean, it truly is our mindset that matters.
Mm-hmm. Absolutely. Yeah. I mean, if you tell yourself you're terrible at something, there's really good evidence. I say this, I have 2 daughters. The math teachers are always giving this research, like, do not tell them how terrible you are at math. Do not tell them that girls struggle with math, because if you reinforce the stereotype, even if your daughter's about to crush it on this math exam, if you remind her of a stereotype about girls and math right before she goes into the test, she'll actually perform worse than she would have. So that it actually really does matter tangibly that you remind people of how good they are before they go out and try to do a thing. So I kind of carry that into the tax world too. I think it's just as important that people are like, oh yeah, right. I'm like pretty good at learning new stuff.
So I teach people board games all the time. I will tell you the biggest problem is people tell themselves ahead of time, I'm not going to get it. You can see them shut down immediately. Like, I'm not going to get it. I'm like, no, don't try to get all of it right now. Just tell yourself that you are able to understand. And if you can tell yourself that you can understand some simple rules, then you're going to be just fine. I feel like taxes are kind of the same. When somebody sat me down with the 1040, Hannah, and literally went through, we'll go through a little bit of this today, but when somebody sat me down and told me how things were different, I didn't have to be good at taxes. I just had to be confident that I can learn.
Yeah. That's all it is. You don't have to memorize the Internal Revenue Code. Nobody does.
And as proof, what I love is that Hannah is the smartest person I know at taxes. And what was funny was you were nice enough to help some of our stackers that are in our meetup groups around the country and to do this great event for them. And you even had to stop as the expert and go and look it up. And you're like, yeah, because it changes every year. Like, I always think that same thing. Google is for the little things, right?
Yeah.
I don't need to know the little things. If I know the high concept, then I'm going to be good. So let's start out then with this. I want to help people do better with taxes. If you're thinking about the side hustle, or even if you're not, you have a whole section of your new book about what the tax form, the tax return is actually for. Let's just do complete 101. What's the tax return for?
I love this. Yeah. And this actually will touch on a reason that a lot of people tell themselves they're bad at taxes. Part of why I like to teach this is it kind of shows you, oh, that thing that you don't know the answer to, that's because you don't have a crystal ball. And having that particular answer you think you're bad for not having is because no one has it. But so what I'm talking about is basically we live in a system, it's called a pay-as-you-go tax system. Meaning you have to pay your taxes as you go throughout the year. And anybody who's an employee, this is easy, right? You fill out one form with the employer that, sets up withholding. So then your employer is taking out your Medicare and Social Security and your federal and state income taxes from every single paycheck. So you are filling your tax bucket all throughout the year. Even though you've done that and it's relatively accurate, you could have hit your head right before you filled out that form and been a little off on the numbers, and that's fine. Or you could have just not known the future and not known that you were going to be employee of the year and get a massive bonus at the end, and that in fact your tax rate would be higher than you thought it would. But when you're self-employed, you don't have anybody withholding taxes automatically through the year. So that's when we engage this other system called estimated quarterly taxes. And so for that, it's a manual way of breaking up a large tax bill and paying it, 1 quarter at a time. But the thing is, when you're paying in your taxes throughout the year, you are estimating based on what you think your income will be for the year. And you don't get to know the answer to how much to the dollar income you made for the year till the year's over. And for that reason, we file a tax return. The whole point of filing a tax return is to reconcile the estimates that we were paying in throughout the current year with the actual, once we can do the math, once the year is over, once there is an actual total.
And even if you're a W-2 employee, it's important. It just is taken largely out of your hands. I mean, if you get a big bonus, maybe on December 31st, it could change everything. Or if, some big inheritance or something happens where your income changes, it could change even for those people. It's just, when you're self-employed, you're going to see it a lot more.
Yeah, absolutely. Plus, when you're self-employed, you can be even more in the dark than when you're getting a paycheck, because when you're self-employed, and this is the good thing, but it also causes people to not know what their income, their taxable income is, you get to take deductions. So if you are self-employed, you get business deductions. This is amazing. But if you're not doing bookkeeping on a somewhat regular basis, you don't know what your taxable income even is. So estimating what your taxes are is impossible if you're not tracking, the deductions that you get to take against that income.
I love the way you phrase that, because what that implies is something I'm going to want to talk about here, which is it implies that we're going to need to set up some systems. And if we set up systems, then we can get around a lot of these scary thoughts in our head about how am I going to do these quarterly things? How am I going to keep up? What if I owe a lot more money than I thought? Like systems, stackers, I think can solve all of this. And I think for people that haven't started a side hustle, but they've watched good TV, they've heard of these things called write-offs from the character David in Schitt's Creek. Let's listen to David talking to his dad about the nature of being in business.
What's this? Looks expensive.
This is some new bedding.
David, didn't I just tell you to save your money?
Yeah, I am testing this out for the store, so work is paying for it.
Work is paying for your bedding?
I was gonna leave, but now I don't want to.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the store, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
Tell us that David's right and the write-off people are helping us when we go into our side hustle, Hannah.
I knew it was going to be that. I love it. Yeah. The government doesn't pay for your lamp straight up, but
1 star to you.
I do think there's a lot of press about write-offs. That is, it's good to check with a tax professional every once in a while to be sure that your write-offs are legit.
But how does it really work when I buy stuff as a business expense? Tell me how that works.
Yeah. Basically, the U.S. government is encouraging you to grow your business. And one of the ways they incentivize that is that they say, hey, if you are paying for things that are investments in your business that are ordinary and necessary, those are IRS words, ordinary and necessary expenses of running your business are deductible. So effectively, if I earn $1,000 from Sunlight Tax, but I spend $100 on a microphone for the Sunlight Tax podcast, and I spend $30 a month for, I just made the math complicated. I have a monthly software fee. And I have, a home office, and I have other expenses, then that will come off that $1,000 of income that I have from Sunlight Tax. In other words, those things, the microphone, the monthly software fee, those are actually subtracted from my taxable income. So that my taxable income, what I pay taxes on, is just what I keep. It's just the profit for my business and not the full gross income. So it's a huge tax savings. And especially when you begin your business, it's especially wonderful because expenses always come before profit does. And so it's really good to know that starting clock comes way sooner than most people expect. But yes, you've got to be tracking your deductions, and you have to do a little bit of bookkeeping and tracking in order to be able to take those deductions. And Joe, if it's all right, I have a resource for your stackers if they're interested.
Yeah.
I have a visual guide to business deductions. So if you're interested, you can find that on my website, sunlighttax.com/deductions guide. Basically, one column shows what you call the thing you're spending money on in your business, in your gig, in your side hustle. And then the second column shows what the IRS calls that thing. So it just draws a line from one to the other. So you can see, like a paid Facebook ad, that would be advertising. I suppose that one's probably more obvious, but it shows you just where they go, right? Where does business coaching go? Where does a membership community I pay money for to kind of learn about this thing? Where does that go? So that's a really valuable resource. And maybe we can link to that in the show notes as well.
Yeah, sure will. No. And
Awesome.
What strikes me is, of course, you're an artist because it looks very pretty. You were talking about deductions, and people like me, when I started out, I'd hear the word deductions, and I heard that was really good from people like you, Hannah. But then I'd hear the word credit. Sounds like different words, same thing. What's the difference between a deduction and a credit?
Those are quite different. They're both good, but it's basically what's the strength of the good, right? So a deduction is lower strength. A credit is super strength. A deduction is something that subtracts off of your taxable income. So it lowers the amount of your income that's subject to tax, and that is going to lower your taxes. A credit is a dollar for dollar reduction of tax. The child tax credit is an example of a tax credit. So the child tax credit or the saver's credit, which is one that you get when you are a lower income person and you put money into a retirement account like an IRA, those will dollar for dollar reduce your tax bill. So they're really strong and really powerful. Depending on what your tax rate is, it could be 4 or 5 times more money that you get from a tax credit than from a tax deduction. But both do lower your taxes.
But if somebody tells you that you can go look for tax credits when you're doing a home renovation or something, I mean, this is a big thing to not ignore.
It's very worthwhile. Tax credits are super valuable. Yeah.
But what's funny is we even miss deductions because we're not bookkeeping. Let's do kind of bookkeeping 101. So I'm setting up my side hustle here during the holidays. I get a little bit of time off, right? So I'm just rolling into my new business. How do I make sure that I'm keeping track of all my business expenses as well?
So the very best thing that you can do is to just open a separate bank account for your gig, for your side hustle. It doesn't actually even have to be what the bank would call a business bank account. It can be what the bank calls a personal account. It just needs to be a separate account that you treat as your business account. So you're going to deposit the income from your business into that account, and you're going to make all your expenses from that account. You can also, if you want the, amazing points, credit card points from a corporate card, you can get like a business credit card. And
can you also there just use, I know there's business credit cards, but can I also use just a separate personal card and call it my business card?
You sure could. Yeah, that would be totally fine. So really for your record keeping, it's the separation that is important.
Okay.
Basically, if you think about it, like businesses just spend so much money because they have a tax advantage to all of the expenses that they are paying money for. So business credit cards tend to give you pretty good perks. Mine gives me triple points on all the advertising that I pay for and also triple points on business travel, which is kind of great.
Yeah, that's cool.
But anyway, that's consult a credit card expert for those. But the point is the separation. And so if you have a separate business bank account and all your income from the business goes in there and all your expenses come out of there, think about what that bank statement is now doing for you. Now it's a record that actually captures everything coming into and going out of your business. So now from there, that's kind of your starting point for bookkeeping. Now you can sort, that expense was home office expense. That expense was supplies. That expense was professional development.
I can see easily then all my money goes in there. All the expenses come out of there. And so I've got this easy record of where I stand at any point in time. So from there, I can kind of figure out how much money to send in to the government on a quarterly basis. Is there a way, do you have a system of how you kind of separate that money out for people that are afraid that they might get behind?
What I see a lot is that people will kind of take step one and they will set money aside for taxes, sometimes even in its own separate account, but they actually don't pay it quarterly. They still wait all the way until the next tax return is due, April 15th. And you're actually, once your side hustle is big enough to be generating substantial income, you get to a point where you're required to pay your taxes quarterly. This is really important to know as your business grows. It's not typically a concern when it's teeny tiny or like relatively small in proportion to a day job. But once it becomes a higher percentage of your overall taxable income, you don't have enough withholding available to you to be able to pay your taxes strictly through payroll withholding. And you have to engage the other system, which is called estimated quarterly taxes. So that's important to know. If quarterly taxes apply to you, if you can't get enough money withheld from a paycheck to pay in the taxes that you owe for the year, you have to pay quarterly taxes or you'll be assessed a quarterly penalty and daily interest. So it really does cost money to not know about that system.
Yeah, and this is one of those few areas where it truly is a lot different than somebody with a W-2 paycheck because W-2 paycheck people, I imagine then, Hannah, are following the same system, but because it's being withheld every single paycheck, you just don't ever have to worry about it.
Yeah. Yeah, absolutely. And if you have access to that system and you don't want to quit your day job, then by all means use it. Piggyback on your boss's withholding. That's great. And in fact, like a trick for you stackers who are in that boat is you can actually fill out a new W-4 at any time. The W-4 is the paperwork you give to your boss that tells them how much withholding you want out of your paychecks. You have a right to change this at any point in the year, and your boss has to implement it. If you start a side hustle and it's starting to generate some income, you can actually go take a W-4, print a blank one off the IRS website, fill it out, hand it into your boss, and basically turn up your level of withholding. And then you can kind of skip quarterly taxes. But for those of you who want to quit your day job, if you start making bank, and God bless, I hope you do, then you're going to have to learn about quarterly taxes and realize that they really do apply to you. Line 38 of your tax return is where you can reference the penalty you're paying because you're not paying quarterly and you're supposed to. So if you want to go check with your own eyes, you can look at that. But that's really helpful to know that you're going to have to learn the quarterly tax system.
So with my W-2, I love that I can just turn up the withholding there and not even worry about the quarterly thing if I keep my day job. But certainly, to your point, we all want to graduate. Can I also, though, when I was starting to climb out of credit card debt, I realized that I needed to know myself well enough to know that I wasn't to be trusted with money in my hand. So the quicker it went where it was supposed to go, the better. Yeah. Do I have to wait for the quarter to end, or can I just, if I get checks maybe irregularly from my side hustle, let's say it's speaking gigs, right? To use one that happens to me all the time. So I get a speaking gig, they pay me a nice fee. Can I just, instead of waiting till the next quarter, can I just send it into the IRS today?
You can do that. So the thing about quarterly taxes that's so different from payroll withholding, quarterly taxes are totally manual. So you can log into irs.gov, click the make a payment button at any time, and you can make a payment. And if you have big chunks of income like that, and you don't want to hold on to the money because you think you might fritter it away on comics and bubble gum, then you can, you can go ahead and you can make that payment. That's fine. If you're optimizing your personal finances and you want to hang on to your money in a high interest savings account as long as you can, you can do those things. But you can pay it right away if you want to.
Yeah, to me at first, it was more important that I just get it to the right place. Now that I've got much better systems, then it became much easier. Speaking of that, there's a time when I need to engage professionals to help me with bookkeeping, right? Your side hustle blows up, you quit the day job, you tell the boss, I'm done, which is an awesome day. Now you work for yourself. At what point do you hire the bookkeeper?
Yeah. Hiring a bookkeeper is, first of all, every bookkeeper I've ever referred people to has become full. And so I'm always looking for bookkeepers. Everyone is always looking for bookkeepers. It's a good line of work to be in because there's a need.
There it is, Stackers. This is an employment show too.
Yeah. If you're a college grad suffering from that really low employment rate right now, look into bookkeeping. You can get yourself certified.
Good start.
So the thing about setting up bookkeeping, you can do it on your own. You can do it manually. When I say manually, what I mean is you can do it just with a spreadsheet. And I honestly think that is not a bad way to go when your side hustle is pretty sidey, like nice and small. But if you're starting to blow up, I would actually recommend, if you're going to use bookkeeping software, that you actually hire a bookkeeper in order to set up books for you. The reason is it's not that simple. Bookkeeping software is based on this system called double entry bookkeeping, where there's 2 accounts that are touched with every transaction you make. And believe me, it's very easy to get turned around and to set that up wrong. So the wrong accounts are getting touched each time. And to undo the mess that compounds over time when you have poorly set up books is way more expensive than just shelling out for a good, competent bookkeeper on the front end to set up right. So that is a thing to be aware of. If you then want to have your well set up books and do your own bookkeeping after that, that's fine. But the actual setup is a bit of a place for a professional.
There are other systems that I should think about tax-wise as I'm setting up my business?
Yeah. In my book, I talk about 3 systems. These are really, really simple, basic systems. But knowing the difference between the 3 of them actually kind of can be very helpful because people tend to confuse them for each other. And that's what makes things messy. So bookkeeping is one of them. Bookkeeping is the hardest one. So it's the heaviest lift. And it's also the one that takes maintenance over time. So If you have to pay quarterly taxes, at a minimum, you want to be doing bookkeeping at least quarterly, because that allows you to know your profit, calculate a tax payment, and make a tax payment on time. The other two systems, and these ones are really easy and they can take just 5 minutes to set up, are keeping your receipts, so receipt tracking, and the other one is tax documents. So pretty simple. Receipts are actually not what anybody should be doing their bookkeeping from. That's where things get horrifying and messy and where you have a panic attack.
When you're bringing in the shoebox of old receipts.
Totally. If you're bookkeeping out of a shoebox of receipts, you'll have a panic attack. I almost guarantee it. And I say this from personal experience, having had that panic attack. What's important to know is that a receipt is your proof that a deduction really happened, that you didn't make it up. And the IRS has the right to look at your tax return going back as far as 6 years. And they can say, show us all your business receipts in any given year. So you want to have them, right? But the good news is those can just go in cold storage. I recommend storing them by year because audits happen by year. And so if you can just pull out 2024 receipts and not have to wade through 23 and 22 and 21, that's great. But that's it. You just need to store them. And as long as you can access them if you are asked, you're good. Now, bookkeeping is where you actually say, oh, and these 3 expenses that I have the receipts for over there, these 3 expenses were supplies, office supplies. These 3 were professional development expenses. These were, client meals that I had to, grow a business relationship. So that's the bookkeeping.
One of the surprises, there were many surprises the other night when you were helping our Benjamin's After Dark groups, but one that really surprised me was you said that people start too late to track their expenses when they're doing just the research on their side hustle.
A lot of people don't realize that your business expenses can start before your business starts. There's a category of deduction called startup expenses. I have a whole podcast episode about startup expenses on the Sunlight Tax podcast. So if you want me, we could put a link in the show notes to that episode. But startup expenses are basically anything that would have qualified as a business expense if you had been in business, but it's happening before in the sort of research phase or the beginning phase. So it's totally fine to keep those receipts and track those. And then the moment your business starts, which PS, to the IRS, that moment is the moment you advertise, not the moment you're profitable, not the moment you form an LLC, not any of those things, but the moment you advertise. So think about what that means. Advertising is like saying, hello world, I'm open, right? That's the moment your business starts. And so you don't have maybe even $1 in the door at that point.
Yeah.
But that's the moment where on your tax return, you put the start time. And then you can go backwards and all those expenses that you spent money on before to set up the business, and they will exist because you will have had to do that. Those get to go in this bucket called startup expenses.
Well, guys, we just began. There is this this book that Hannah wrote that came out last week on this topic, has so much stuff. I love chapter 14, Save Like a Millionaire, Tax Advantage Accounts. And everything we talked about, notice the tone. It was all 101. It was all you can do it. The entire book is written with that tone, which is why it's a beautiful thing for anybody who's starting a business, who's afraid of taxes, who just wants to know, how does this stuff work without having something that, even on Stacking Benjamins, I've had people tell us before, we're like, I didn't understand hell you were telling in that, anything you were talking about in that segment. It just all went right over my head. Well, if that's what you're afraid of, then Hannah's new book, Taxes for Humans, Simplify Your Taxes and Change the World When You're Self-Employed, is available everywhere, right?
It is. It's available everywhere. Yeah.
Awesome. We will link to that in the show notes. Hannah, thank you so much as usual for mentoring our stackers today.
Thank you for having me again. It's so awesome to talk to you.